Hi, Premier Plus Realty. It's Jillian Young, and I am joined today by Scott DeGregorio and Edgardo Balentine, our preferred lending partners at Neo Home Loans. We're here on a Friday. It's going to be a great day today. Actually, you are not going to see this when it happens, by the time it happens, but we have like baked ziti for lunch. We're doing a nice potluck here. So we're in the North Naples office. We're always doing something fun with these guys. So I encourage you to take a look at your event calendar and join us next time. But we wanted to take a moment to talk about the market, specifically what they are seeing after Hurricanes Helene and Milton have passed through our area. What does that mean in terms of new appraisals or new inspections or loan commitments? We're going to talk a little bit about the market and some of the challenges that we're seeing with inventory and sales and what sellers agents and buyer agents can do. And also we're going to touch on a topic that you may not have considered, but we're going to talk about reverse mortgages and some opportunities there. We'll also talk about a number of lead sources that you can consider. So with that, hey, welcome, Scott and Ed. Good to have you.
Thanks
for
having
us,
us.
especially on a day where there's lunch. Excellent.
Oh, man. And it's baked ziti. Love it.
Yeah.
So good. Well, let's get into what are some of the problems you are seeing in contracts right now. You had pending contracts before Hurricanes Helene and Milton, and now maybe there are some delays in closing. I want this to be a learning opportunity for PPR associates so that they have an idea of when a storm is coming, what they can prepare their customers for, and just a point of education for them. So what are you guys seeing right now?
Do you mind if I jump on this, Scott?
No, go ahead, bro.
So, I mean, first of all, I hope that, everybody in the PPR family did okay with the storms. They were scary because there's a lot of things that weren't in the script, like tornadoes. That was probably the scariest part, at least in my house. So hopefully everybody's okay. I think that when something like this happens, there's two ways that I see, right? Like, what are the real problems, and then the problems that are not necessarily real, but that we all need to kind of like understand and be more patient and give each other more grace, right? So the real problems, the biggest things that we're having is, yes, there's properties that got some damage. The majority of the properties though didn't, right? Like the hurricane passed and a lot of the properties didn't get damaged, especially with the first one in our area. Having said that, the two things that we have when a major disaster happens is, one, insurances stop binding insurance. So, let's say that we have a closing that's going to happen on Friday, and we're not going to bind insurance until maybe 3 days before, 4 days before, something like that. But if there is a major storm coming, an insurance company is able to say, we're not binding any more insurance, which means that we cannot close on the house until insurance is reopened. So that's one real problem that we have that causes delay, and that is one of those things that there's nothing we can really do other than, when we see that the closing is coming soon and that a storm is approaching, a lot of insurance agents, and when we have a good team around us, we're proactive about binding that insurance earlier than we would normally do it, just so that we can get ahead of that. So that's problem number one. The other problem that I see that's very real is, well, there's a lot of re-inspections that we need to do on the properties. Like, we need to send the appraisers back, and unfortunately it cannot be the realtor or even us just driving by and taking pictures. It has to be the appraiser. Now, the question that we always get is, does that mean that the client needs to pay for a full appraisal, for another appraisal going inside the house? The answer is no. They have to pay for a much lower fee, and it's a drive-by appraisal, but we need to wait until now the appraisal goes out. The appraiser takes the pictures, the appraisers upload the pictures, the underwriter reviews the pictures, and that can cause some delays. So those are like the two biggest things that we are still dealing with to a certain extent, because those are things that we can't control, nobody can control, and just cause delay. Would you add anything to that, Scott?
The only thing I would add to that, Ed, is that on the inspection piece of it, like, everybody has to appreciate every single finance transaction in Southwest Florida needs a reinspection.
Yeah.
So the appraisers are busy. I was talking to an appraiser yesterday. He said that from sunrise to sunset, because obviously it has to be light out, He's just driving by houses. He said, I'm doing 10, 15, 20 a day.
Wow.
So everybody needs to have some patience because there's literally 1,000 re-inspections that need to be done and nowhere near 1,000 appraisers. So just a little patience and understanding and grace, I think, is the only thing I would add to that.
And then title
So,
companies that couldn't close,
yeah,
they didn't have power, it took long, and then
Mm-hmm.
all the usual suspects.
right. So, are you seeing a difference in appraisal amounts with damaged properties right now?
Luckily we haven't had any of our subject properties damaged. And when they're doing the re-inspect, they're not assessing the value. All they're doing is driving to the front of the house, taking a couple photographs of the exterior of the house, putting it in a form and sending it in. So
Mm-hmm.
it's not like it's the appraiser doing it, but don't think appraiser equals value. In this case, appraiser equals photographer.
And
Right.
just to add to that, even like if you're representing the buyer or even the seller, appraisal doesn't necessarily means a good inspection either. Like
Mm-hmm.
the appraisal is literally going by driving and taking pictures. So I have a property, for example, that we were able to close in, and there were some issues in the soffit, but that the appraisal didn't catch because from the street it looked fine and there wasn't any issues. But for a buyer, that's important. So luckily they were able to fix that. So as an agent, you should still make sure that the property is up to par as far as your buyer is concerned.
Mm-hmm. Right. Yeah. And then on the broker side and even on the legal side with our title partners at Title Plus, we're seeing several issues with pending contracts that were scheduled to close that week that do need to be re-inspected, that maybe there was some damage. And now we're enacting some of, the force majeure clause or
Force
casualty
majeure.
claims, things like that. So I appreciate that perspective from where you stand. So I think the lesson for agents is when you know that a hurricane is a possibility, when our governor puts us in a state of emergency, your county or the county where the pending sale is, insurance will stop binding. And you need to prepare the parties to the transaction that we could see either a slight delay or a severe delay. And they might want to start coordinating their moving plans or, all of those things that come along with closing on a transaction. So it's interesting. Thank you for sharing that. Anything else with that topic you want to share?
I don't think so. I think that covers it. And just the grace piece again. Like I see a lot of
Yeah.
agents barking back and forth at each other over this stuff. Like this
Yeah.
happened to us. This isn't somebody dropped the ball or anything. This is just circumstances. It's part of the sunshine tax, as they say.
Yeah. I do want to talk a little bit about the opportunity though that we have with these hurricanes and with these things that happen and
Yeah.
and when I mean opportunity is like how people can take advantage of different type of programs and things like that to kind of like rebuild and go back to where they were. Because look, you mentioned about the appreciation and if we see the values drop. The truth is, hurricanes are not new to Florida. Yes, we're
Mhm.
getting hit a lot more, but the truth is, like every time that there's a hurricane, when we look at the year that the hurricane hit and the year after the hurricane hit, appreciation continues to go up. So we don't expect a hit from an appreciation standpoint. And when I mean by opportunities, I think a lot of people should know this. Like there's a program, for example, that's called an FHA 203H that allows anybody that was in a disaster zone, that was declared a disaster zone and got major damage, even if they were renting their own property, they can buy or rebuild their house with 0% down for their primary residence. So, and
Mm-hmm.
that, by the way, like I said, this is not just for people that got their own home damage, but the house that they were renting in damage. They
Mm.
have this program available to them for the next 12 months. So, if you're listening to that probably and you got your house damaged, the last thing you want to do is get a loan right now and deal with all of that. But it's super important that you document the damage because that's what we're going to take a look at in 6 months, even in 10 months. We're going to make sure that everything was documented. And if everything was properly documented, you can get that 0% down. We also have fix and flip programs where, if an investor, that happened last time, if an investor looks at a property that maybe it's not up to code,
Mhm.
but if they make some changes, they can resell it for a higher value. We can do a loan like a fix and flip or even just a simple renovation loan. So there's a lot of avenues for people where they can either rebuild to back where they were or even, find some investing opportunities from this.
And another piece of this too, from an opportunity standpoint, Jillian, I think is really critical is every time hurricanes happen, I always end up doing loans for people that just say, I just wanted to move further inland. So
Yeah.
there will be some people that are in these flood prone areas. I mean, you get flooded 2 years ago, you get flooded back to back this year. Like there are going to be some people that are going to say, I'm sick of living in this community where I'm constantly being flooded and I want to move across town a little bit. So for all the PPR family, the associates in the PPR family, like we have to be in touch with our database and looking for those opportunities and looking for the areas like that, the people that we can serve in that way.
Yeah, it's in times when we're all experiencing something together. We all have a common enemy that we are not each other's enemy right now. So for the realtor working with the lending partner or the title company, the common enemy is the weather. And like you said, what happened to us. And so when that happens, we need to get closer to one another. So agents, you need to start calling everyone. How are you doing? What are you considering? How can I point you to a certain resource? Are you aware that there are other opportunities available to you? So I think now more than ever, Ed, you said this earlier when we were chatting before we started recording, that when we have outside pressures and you're hearing everyone share negativity, how can you stand out and be needed? How can you create a job for yourself in this moment by being helpful and a resource? This is the time when a very educated and knowledgeable real estate agent is critical, because the customers could be not served well if they go at it alone, right? So when you have pressures from the outside, this is the time when your knowledge and expertise shines. So totally agree. And yeah, our hearts are with all of our friends who are experiencing pretty significant losses, especially those north of us. We have several associates in the Sarasota area, and it's just been really tough and challenging for them. So
Yeah.
I wanted to touch a little bit on the market. Uh, it's October, and Ed, you pointed out earlier to me that the last 3 years in October is when we saw sort of an increase in interest rates. Would you say the highest interest rates or the highest increase in interest rates? And
So
also, yeah, and at Premier, while October is a big listing month for us, it's not necessarily a big sales month. We don't have a whole lot of closed transactions. So what is your perspective on that, Ed?
yes, October is scary for the rates, or the rates are scary in October. I don't know. I don't know what goes with what, but yeah, for the past 4 years, actually, it's either been the highest hike in the rates, or like for example, we had it today. This is the rates, the highest rates we've had since like April or something, and then for the last 2 years, it's been the highest rates for the whole year. Now, look,
Mhm.
rates fluctuate, right? So like our job with refinances and when somebody's under contract is to make sure that we get ahead of that hike. So all of our
Mhm.
contracts, all of the clients that are closing right now, we close their pipeline, or we close their rate, we lock their rate before that rate went up, because there's science, right? Like there's science, we'll know. So that's the same thing with the rates. There's science that those rates are going to go up, or that those rates went up, and then we just need to work with that flow. And when it comes to the market, I just think that, look, the truth is, and I would love to hear Scott on this, but if somebody is not 100% convinced that buying a house is the best decision of their life, which by the way, I am a huge proponent of buying a house. I've bought quite a few houses myself, and every time I buy a house, there's always a little bit of doubt, even though I'm super optimistic. And the only thing that I regret is not having bought more houses. There's still a little bit of doubt because it's emotional and it's a big ticket item. The truth is, right now, there's a lot of excuses for people to not want to buy houses. There's a ton of
Mhm.
excuses, and I call them excuses because if you actually go deeper onto each one of them, it's actually a reason why you should buy. But on the surface, they're excuses. The election is coming. We just got hit by 2 hurricanes. The economy is weird. Rates just went up again. Rates will go down later, like, because that works on both ends, right? Like rates will go
Right.
down later, so maybe I should wait. Like, so all of these things are great excuses. And Scott and I will share some perspective on how those things are actually positives. But my invitation is, look, a true advisor asks the hard questions. Like, if we are actually going to be helping clients and making making our commission worth for our clients, we need to ask the hard questions. And what we've been saying for a long time is we need to lean into those things, because most people say those four things that I said: rates, the economy, the election, and the hurricanes, and people go, yeah, I know, but it always goes up. We need to really lean in and have a real understanding of how that affects the market.
Everything Ed is saying is so correct, because here's the thing, right? If we're going to be true advisors, we need to increase our knowledge base. And if one was to increase their knowledge base, if there was a real estate agent that was to increase their knowledge base, it might look like that. I go to one agent and I say, hey, I'm really concerned about buying a house after the hurricane, so I think I'm going to wait. And the agent goes, no, 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 you should buy now. It sounds like a sales pitch.
Mm-hmm.
Versus they speak to another agent and say, look, I'm really concerned about the market with the hurricane. And they go, I was concerned about that too. And it was really interesting. I actually did a lot of research and looked at all the major hurricanes from 1992 forward. And what I found was that appreciation actually increased after the hurricane. And although that was confusing to me, what I realized was it comes down to supply and demand. There's less supply because homes got damaged in the hurricane, and there's more demand because those homeowners are now buyers, where the day before the hurricane they weren't. So I understand they might feel that way, but when you look at data, it's not the case. And because of that, I think we should keep looking. That is a radically different lead conversion process. And if we're going to be advisors, let's take this time and adapt that knowledge, because those are the types of conversations Ed and I are having with all the clients that the PPR agents send to us. But our concern is that before they have the opportunity to refer them us, the agents are losing the leads because they're not armed with that knowledge, and they're not armed with that scripting. And if we could level up our game and get knowledgeable as to why those four objections aren't real, because all four of those things actually lead to home prices going up. But we need to be able to have some data and knowledge behind it and some good scripting, so it doesn't just sound like a pushy sales pitch, because nobody closes with a pushy sales pitch.
Right. And so back to Ed with the two solutions to this problem that you discussed earlier with us when we met before the recording. You said there's two solutions. One, from the buyer's agent perspective, it's time to flex their negotiation muscle. So what do you mean by that?
Yeah, so look, the way I see it from a buyer's perspective is we need to be careful what we wish for, right? This is a difficult market, which makes us more necessary. In a difficult market, you need a captain to help you navigate those difficult waters, right? Mm-hmm. If it's easy and if it's calm and if houses are selling themselves, then you're going to have a lot more trouble making sense of why you're necessary. So look, we are licensed all over the country. So, if everybody listening wants to buy a house anywhere else, we can help them. But in other states where there's not that much inventory as Florida, the agents are having a hard time fighting for their commission because houses are flying off the market. As soon as you put a house in the market, they just leave the market right away. So it's very hard for a listing agent to tell their seller to pay for the buyer's commission. Now, this is not the case here. Here, listing agents and people that are selling their house, they're trying to figure out a way to move that inventory. So what I see here, it's opportunity for a good buyer's agent. Why? Mm-hmm. And let's talk some numbers, right? The expectation, the optimistic expectation, without getting, salesy and without talking about points and the optimistic expectation is that we will land in a place in maybe 2 years where the rates are going to be between 5.5 to 5.25. That's the optimistic expectation. Mm-hmm. But the thing is, we are a lot of clients right now in our pipeline. We probably have 5 clients that are getting a 5.5 to a 5.25 rate, not because the rates are that, but because the sellers are willing to give enough points and enough concessions and enough buy down strategies for the clients to get those rates today. So think about it from a buyer's perspective. I can get the lower rate today. I can start paying that lower rate now as opposed with the lower price as opposed to waiting 2 years for the house to go up. And I don't have to pay rent and miss out on all the amount that I would drop that mortgage balance for those 2 years. So from that point of view, man, if you are a buyer's agent, you have a huge way to negotiate and show that buyer that what they're waiting for is actually here. And the example that we give people, because we have a cost of waiting calculator, is once the rates drop, let's call it at 5.875%. Sellers are not going to need to give that much concessions. So most buyers are going to end up at 5.875% as opposed to the 5.25% that they could get today with those concessions. So,
and let me put some data behind that, because BlackRock did a study. Median income throughout all the metropolitan statistical areas of the country median home price, today's interest rates, how many people qualify. Then they said, okay, if interest rates dropped 1 full percentage point, how many more people would qualify? And their answer was 5 million additional buyers. And Jillian, you and I both know that we sold just over 4 million homes last year. So we're talking about an increase of the buyer pool of more than double, let's call it 125% with the 1% rate drop. And they're talking about rates dropping 1 or 2%. So for the people that are waiting for rates to drop, besides everything Ed said, that's right, that cost of waiting analysis. And by the way, if you're a PPR family member and you want to have one of those to your marketing materials, please reach out to us because it's such a powerful tool. But besides all of those benefits, what's an intangible but real thing is that home prices are going to go up. Negotiations are going to be harder. Bidding wars will be back. There's all of these things that are going on where, yeah, your rate's lower, but you're paying $10,000, $20,000, $50,000 more for the house. You're still in a worse position than you would be today. Put in an offer, ask the seller to pay 4% of the sales price towards concessions. And that's the sweet spot where we're getting people in the low to mid 5 range on a 30-year fixed, not a temporary buy down, a 30-year fixed. So
Wow.
with the right strategy and the right structure and the right team around you, you don't have to wait for those interest rates to hear today. You don't have to wait for that so you can buy more house, because we could use that strategy to buy more house today.
I think it's so important for our agents and our team to know that even if you don't have the experience that Scott and Ed have, and you don't have that knowledge at your fingertips, that they offer all kinds of marketing materials that you can pass on to your customers. You can call them for a little sales coaching call and say, how do I explain this? And they're in your corner. You don't have to rewatch this podcast 5 times to try to memorize the way that they articulated that. They are there for you. So I really appreciate that, that encouragement for buyers agents.
I want to pause on that for a second, because let's talk about the implementation of that. We are trying, and look, if somebody's listening to this and they go, look, even though you're trying and you're saying that you can offer it these many ways, it would work better for me if you did this, we're happy to do it. But we're trying to allow you, especially PPR agents, to be able to implement this in a very easy way. Why do we think it's an easy way? We do content days, for example, and these are the scripts that we're talking about. So if you don't know how to say it, if you don't know what to say or anything like that, you go to content day, we do a script on this, and then you have that video forever that you can send your clients to talk about this particular topic. Other than that, we also have a link where you can just click on the link and ask for a flyer that's going to be co-branded to you. You don't even need to talk to us if you don't want to talk to us. You just ask for a flyer co-branded to you, and you'll have that flyer co-branded that talks about this topic. And if you actually want something that's even more personalized, you can send us an email and we'll create the flyer with you, and we'll do a 2-minute video explaining that for that particular property. And besides that, we do classes every week. So my point is, it's not about talking about all these things and then, okay, cool, but I don't know how to implement them. We have the different avenues to implement it via video, online, via flyers, personalized to you, or even coming to a class. So my invitation is, think of these things and think about implementation, not just about, okay, now I'm smarter than I was before about this one particular topic, but it's not going to make me any more money.
Mm-hmm. Mm-hmm.
Yeah,
Thank
another
you.
opportunity too is for agents when they're on a listing appointment. Zoom us in. Let us explain the buy down strategy to the potential seller. Like we're in the trenches with the PPR agents, so just lean on this resource and trust me. When you jump in the water, you'll realize you like it there. The water's just right.
The water's just right. And speaking of listing agents, let's take that conversation we just talked a lot about on the buy side. Let's talk about the sellers. What are the opportunities for our listing agents right now in the market that we're currently in? You had a lot of great points when we did our pre podcast meeting. So would you, Scott or Ed, talk a little bit about encouragement, motivation for those listing agents?
Ed, you want to start?
Yeah. So the way I see it is, look, I see this as a huge opportunity, especially for new agents, and especially for agents that are not necessarily legacy agents, because legacy agents have been doing this for a while. This is the market that's very different than it was before. The market is not the same that it was in 2019. The market is not the same that it was in 2020. We have a script on the last content day that says, a lot of agents think that painting the walls millennial grays was going to sell the property. That's not the case. 45% of Americans are saying today that the reason they don't want to buy a house is because they think it's too expensive. So let's sell them the way that they want to buy. And right now,
Right.
we can give seller buy downs. We can, you can be the agent that positions yourself as an agent that can use the fact that the seller is paying for, or offering a buyer compensation. You can position yourself as, hey, I know how to market this the right way and the way that we
Mhm.
are allowed to market it. You can offer things like assumable loans. If you are sitting on a house and you have a 2.5% rate or a 3% rate, and you can offer that rate to a potential buyer, there's no better house in the market than yours. That's going to be the cheapest house in the market. So there's a lot of opportunities. The problem is, and the reason why we're all stuck is, the opportunities are newer opportunities that we haven't had for the last 5 years. So because they're newer opportunities, people haven't adapted to making those type of offerings. And
Mhm.
but if you're an agent and you learn two of them or three of them, man, you can position yourself as an expert so much faster than you would in a market where houses are just selling easily.
Yeah, and,
Yeah.
and one thing I would add to this, and I think this is a huge opportunity because what happens in the real estate industry is all the professionals focus on the real estate part of the economy. But if we expand out to the greater economy, here's what we'll see. We'll see that credit card debt is at an all-time high. We'll see that the average credit card debt in America is at 28%. We'll see that a home equity line of credit debt is all-time high with an average interest rate of 10.5%. The average car payment in America right now is $800 a month. So the problem is with the sellers that are married to their 2 or 3 or 4% rates that don't want to move. What we're talking to them is about, instead of taking all of the equity from the home, from the sale of the home, and putting it into the next house, we could do an analysis where we could take some of that money and pay off their debt. Okay, we call it a debt consolidation move up purchase. If we're doing a debt consolidation move up purchase, we're counseling the seller on how we could do it. We had a case where if they just took all their equity and rolled it into the next house, their house payment was going to go up by $2,600 a month. But when we took $100,000 of that money and knocked out a bunch of these high interest rate debts, they were able to do that, and their total household expense only went up like $250 a month. So they were able to move up into the bigger home, to get the extra bedroom, to get the extra square footage, to get the bonus room, whatever it is they're looking for.
The millennial
And
gray.
with some proper strategy, only move their payment a few dollars, their overall household expense a few dollars a month. And these are conversations that agents are going to be uncomfortable having, that we have all the time. So again, it's so easy for agents to think, hey, when somebody says, hey, I need a mortgage, do you know anybody? Oh yeah, Neo's great, let me call them. Let's expand that into all of these other opportunities where we can really partner with you and make a difference. And in an area where we need to display our professionalism more than ever before, in my opinion, these are the types of consultative conversations that we could be having that'll buy loyalty to you like nothing else.
Yeah, absolutely. Hey, before we wrap up, I do want to touch on three different topics really quickly. So, you wanted to talk about a fix and flip opportunities in this market right now, particularly after Helene and Milton and hurricane season, reverse mortgages, and then lead sources for agents right now. So, Scott, do you want which of those do you want to tackle first?
All right, why don't you do fix and flip, and I'll close with the last two.
Yeah, you'll
Okay.
close with the more age appropriate for you, which is the reverse mortgage. Why don't we do that?
Okay.
Look, fix and flip is simple. We can help the person acquire the property and finance the renovations.
Great.
So, a lot of properties right now are going to be impossible to finance, especially if you see them as an investment property, because a lot of these programs that are renovation programs don't allow investment properties. The fix and flip allows you to do that, and to honestly to just maximize that. So instead of just spending all your cash doing one property and waiting 6 months or 10 months to get the money on that property, you can work on different projects at the same time. They can close in the name of an LLC. We don't really care a whole lot about their credit score, and we don't look at income. We just look at the deal itself, and if the deal makes sense, we can do the loan for them. And as far as the down payment, which is the question that we get a lot on that, it depends on experience. So if they have zero experience, they need to put a larger down payment, like a 30-40%. If they have a lot of experience, they can go as little as 10%. But there's a lot of loans out there that we can help people, maximize this, especially people that have the crew and have the knowledge and the context to be able to, fix these properties and do a good job. Jump on that. If you're
Yeah,
like me that don't know how to, change a light bulb, then don't do it.
Yeah, we actually have several agents who are incredibly good at that. So I'm excited
There you
for that
go.
opportunity. So Scott, well, you want to talk about the old guy topic there?
Yeah, I want to talk about reverse mortgages because the problem is this: if Edgardo went to sell reverse mortgages, the prospect would look at him and go, "I have socks older than you, son," and that would be the end of it. So clearly, I'm the right person for this. But look, people are not touching on this reverse mortgage thing. 81% of Americans retiring today have 100% of their net worth in their home's equity. Okay,
Mm-hmm.
so we're doing a reverse mortgage for purchase. I'll give you a quick case study. A woman came to me. She sold her house in Missouri. She owned free and clear. She was going to buy her dream home in Florida. What didn't occur to her is that homes in Florida cost a lot more than homes in Missouri. Agent referred her over to me. She made $1,700 a month in Social Security. That was it. Even if I could get her a mortgage, I'm not going to because I'm going to tank the woman's financials. So we're able to get a reverse mortgage where she does not have a mortgage payment at all. Okay. Now you gotta be above the age of 62. You need a very substantial down payment, call it 40 to 70%. But there's a lot of transactions where we could do that for people. And this reverse mortgage for purchase market is huge. And nobody's talking about it, nobody's leaning into it, nobody's doing it. So if you
Pause on that again and like
Mhm.
explain, like you can purchase a house, like acquire a property with a
Mm-hmm.
reverse mortgage, putting like basically you're only putting half of the property down payment and then you get a mortgage for the other half, but you don't have to make payments on that other half.
Correct. Correct.
Like just to
And
super simplify, right? Like that's crazy.
it's and there's basically no income that we looked at. There's basically no credit. I'm saying basically because they do look a little bit. And just to touch on the biggest misconception with reverse mortgages, no, you're not signing your house over to the bank. If you were to get a reverse mortgage and you were to pass away, the mortgage has to be paid off like any other mortgage, and the equity goes to your heirs like any other situation. Way back in the 80s, you used to sign your house over. Hasn't been that way for a long time. So reverse mortgage for purchase, I need everybody to lean into because there are a lot of people in America right now. They want to move, and all of their equity, all of their income, all of their assets are in their home's equity, and they think they're stuck, and they're not. So this is a huge, huge opportunity and niche that agents can jump on, and we can certainly help them. I love reverse mortgages; I do a ton of them, and that's an opportunity to talk about for sure. And then the last,
I wanna say something on that, Scott, because I can do reverse mortgages. Like I can do reverse mortgages. I haven't done a reverse mortgage, and a lot of loan officers can do reverse mortgages. It's a very specific mortgage that if you don't have the experience doing them, it's a mortgage that you honestly, it's not just like, well, there's a couple of guidelines that are different. It's a completely different ballpark. So I'm saying this because I can do them and I choose not to do them because it will be a disservice to the clients. And that's why Scott, who does a ton of reverse mortgage, like all of the reverse mortgages comes to the branch, goes directly to him. So just make sure that you're not just thinking, well, so and so can do it. The fact that they can't do it doesn't mean that they should do it, especially a mortgage that's so specific like this one. Sorry to
Mm-hmm.
interrupt, Scott, but that's worth
no,
saying.
No, it's a good point. I mean, the application's different, the software is different. Like it's a totally, totally different concept. So that's a good point. The last thing I want to close with, Jillian, is lead sources for real estate agents. And I'm big on this. Agents always chase the consumer, and the challenge with chasing the consumer is you always have to chase the next consumer. I do not see enough agents focusing on chasing lead sources and referral sources. And one lead source that I am focusing a lot of my energy on now are family law attorneys. Okay, let's think about how can we market proof our business. Well, guess what? When people are getting divorced, they're getting divorced. It's not like a husband and wife are screaming at each other. I hate you. I never want to be married to you again. I want a divorce too. Actually, we should probably hold off because interest rates are 7% right now, and the market's a little soft. And I really think we should. No, it's I hate you. I want a divorce. So when a divorce happens, okay, there's a couple of options. Number one person refinances and the other person buys. Okay, so one deal for me, one deal for an agent, or they both sell and they each buy, in which case, three opportunities for an agent and two opportunities for me. Let's start chasing family law attorneys. I was on the phone with an attorney yesterday, and I asked her, I said, how often do lenders and real estate agents market to you? And she said, you are the first lender, you're the first person from the real estate industry that's ever spoken to me about how you can help my practice.
Okay.
So let's start going after lead sources that are market proof. And that's why I focus on things like reverse mortgages, things like divorce attorneys, because they're market proof. Whether the market's up or down, rates are up or down, economy's up or down, they happen, and those people need the services that we provide. So please take part of your day, agents, and go after your divorce attorneys. Give me a call. This is a big passion point of mine. Happy to work together and partner with you on this. But if we could put together enough lead sources, you guys aren't chasing agent after agent after, or I'm sorry, consumer after consumer after consumer. You're just getting, your phone's just ringing with leads, kind of like the goal here is as a loan officer. So I hope that really resonates with some agents, because this could make a long-term monumental difference in not only your business and income, but also your lifestyle. Because attorneys aren't calling you at 7 o'clock on a Saturday night asking you questions.
Mortgage Math Camp is a class that's going to be taught by Ed at the Bonita Estera Board of Realtors, and you can get 3 CE credits. And what is Mortgage Math Camp? It's cash flow planning for millennials and first-time home buyers. This knowledge that you'll receive at Mortgage Math Camp is going to increase your value and your necessity to be in the market as an expert in these areas. So it's a 3-hour workshop. It's designed to equip realtors with innovative financial strategies to enhance their business and better serve their clients. Understanding the complexities of mortgage planning is crucial to ensure you don't miss out on potential sales or decline clients who are actually able to buy. So this is going to make you a more creative negotiator, a more creative realtor. And again, you're going to earn every penny with all of the knowledge that you will receive. So that's November 6th. You can sign up for that on your PPR events calendar. And I really appreciate you guys for putting that class on for us. It's a total gift for us. So we have talked about several things. We've talked about the what to look for after a hurricane and delays in closing in terms of a financed transaction. We've talked about how October is historically a tough market for rates, but how there are opportunities within that for both buyers agents and listing agents. We talked about opportunities for fix and flip. We talked about the FHA 203H program for those affected by the hurricane. We talked about how legacy listing agents, those tactics that you were using before in the unicorn years, are not necessarily the tactics that will work for you now. We talked about the opportunities with reverse mortgages, and then different lead sources that you may not have thought of before, like a family law practice where you can get referrals from customers there. And then, of course, Mortgage Math Camp. So with that, do you guys want to add anything before we close up?
I want to add one thing on the mortgage math class. Look, the name is lame. We understand that. But it's a CE class, and we can't change the name. But
Right.
what you're going to actually learn in there are the types of strategies that Ed and I were talking about today. Specifically, how to buy down work. How do we position and present that to buyers and sellers? How can we use all of these data and statistics to help increase our lead conversion? We're not sitting there teaching people arithmetic. We're teaching them implementable strategies that will very, very, very much move the bar in this market that we're in, because it is a tough market. So please don't let the name scare you. If you're a person like, oh my God, I hate math. Cool, hate math. That's not what we're really going with the class. We're going in a totally different direction. You will walk away with implementable, actionable items that you could put in place in your business right away and move the needle.
And Scott will be there as well.
Oh, great. Okay. And maybe you'll have snacks. A few snacks in the back.
Yes.
Yeah, great.
Lots of snacks. Lots of
Go.
snacks. Maybe
Come for
tequila.
the CE credits and for
open
the
bar.
snacks, and leave as a more valuable agent in the market. So great. Well, I have to say this. I have been at PPR for about 7 years, and I've had the opportunity to speak with a lot of our associates, of course, but then other leaders at other brokerages. And I talk to them a lot about their mortgage partners and what they look for, and on a national level and a local level. And I can tell you that there are no other mortgage partners, preferred partners that I am aware of that offer the amount of education, marketing resources, knowledge, availability, and willingness to help you on a day-to-day basis in your business more than these two sitting right here. And whenever I rattle off all the things that Neo Home Loans and the team does for our associates to increase their business, my friends that I talk to say, that's incredible. That is not what we are getting from our partnership. So I'm just really, really grateful for that. And I can't overemphasize enough the value that you get. You actually get special treatment as a Premier Plus Realty associate because of our preferred partnership. You get to the top of the line on their list, and you're not that, the programs are available for all associates. It's just the access and the marketing resources and all of that. Neo Home Loans, their goal is, what if you could increase your business by 1-2 more closings a month because of this partnership? That's their heart to serve you. And I'm just really grateful for your time this morning. So, hey, let's go to the potluck here in the North Naples office. So
Let's go eat. Jillian, thank you so much for having us. It was a pleasure. And we love you, PPR fam. Reach out to us, please. Put us into your business. We'll make a difference.
thank you. All right. See you next time.
Bye, guys.